everybody, welcome to my channel. For those who don't know, I'm the first immigrant in the United States of America. I always wanted to do trading on the US market, but I never really had enough knowledge or never thought that I had enough time to do this. But today, for the first time, I wanted to disclose my trading vlog with you guys. And I wanted to share, some of my personal thoughts on the current market and those character, personality, and the mentality I think we should have as investor. Like I said, this is not a financial advice, just my own personal analysis and perspective. Generally speaking, right, when the interest rate comes down, and that tends to be bullish for small cap stocks and bank stocks and even sectors like used cars. And as you can see, these are the things I have learned in the past years, trading. Pullbacks and rallies are normal. Institution are always doing something, with the market every day, like we know. Focus on the fundamentals, not headlines. Earnings matter more than the emotionals, right? Do not trade on fear and do not react to those noises. Long-term investors do not chase every move. Consistency builds wealth, not luck. Slow growth is still growth, right? Stay disciplined, stay patient, and stay invested. Something that I always want to talk to people who just started, their journey in trading. Those are the things that you guys have to be mastered with. Okay. So here's a screenshot, of my trading journey since the beginning of this year till today. I think my winning uh, rate is quite high, out of 40 different stickers or markets or company that I have chosen in the past. Um, Not a bad, a score for a guy who really never studied too much about the market and never had a degree in finance even. 70% of a ring rate, I think it's well above majority of the uh, maybe a major hedge fund, managers, I would guess. Okay. And so the first stock I want to talk to you guys about is SoFi. I guess you guys probably not, unfamiliar with this stock. And recently, right, we have seen the SoFi pull back a little bit from its all-time high. And this kind of move is very common and often simply just reflected, the normal market financing activities. For those of us, who bought in at a really lower levels, lower price, this is actually a healthy development. It gives the long-term investors, another chance to add just a little more with the spare capital, aka cash, as long as we remain patient and allow the company to grow over time. When you look back later, you're more than likely to see that those decisions that you made back then were the right calls. For investors who enter lower price and believe in the company fundamentals, this type of pullback is not something to be scared. It's opportunity. But for those who chase at the top, and of course it feels really uncomfortable because being trapped at the higher levels is never a fun thing to do, and that's why we have to analyze things rationally. And SoFi is a really strong growth company with a meaningful long-term potential, and you don't want to wait until it hits $40 or $50 to start buying, because by then your percentage gain will naturally be much smaller. And if the stock dips again, I personally think that it's a chance for investors who have, some extra cash and a long-term horizon to consider adding a little bit more. Again, this is not a financial advice, it's just my personal view and should not be taken as investment guidance as well. Everyone should make their own decisions based on their risk tolerance and financial situation. As you can see from the graph, right? If it goes down to $25, I might just simply add 1% or 2%. And my long-term target for this stock, I think it's gonna go to $60 to $75 per share. Again, I try not to, make something too complicated for anybody who just enter the market to understand how the market works and all that kind of stuff. Just, a simple PowerPoint slides, nothing too tricky. But if you haven't opened a position yet, anything that under $25 can still be a solid starting point for you. Of course, that depends entirely on your capital, your risk tolerance, and how big you want your position to be. Always control your allocation. For me, I'm not letting this position exceed 4 to 5% of my overall portfolio, and this is just my personal approach, not a financial advice. Everyone's situation is different, and so make sure you make decision that fits your own financial plan and your own comfort level. I want to mention that one of those links below is related to SoFi Bank. I personally use SoFi, myself, and I have earned a solid amount of interest simply by keeping my money there and just, you know, trying to forget about it. And right now, SoFi offers an annual saving rate, I believe currently at 3.8% or 4.3%, I'm not sure, but still, it's quite big compared to the traditional, banks out there. And I just enjoy loving it, using it. If you want to check out SoFi Checking and Saving account, I have included my referral link below. If you choose to sign up using the link, it helps support the channel at no cost to you. And next stock, okay, so now let's shift our focus to Weibo stock. I think a majority of you guys out there currently doing trading are not, unfamiliar with this platform. I think a majority of you guys even using it. I really personally enjoy using it myself for the past couple years. hmm And because we would just, introduce a new AI system, and personally, for me myself, I think this could be a major growth, you know, factor for the company. If everything develops smoothly and the company continues to meet its benchmarks, I honestly believe that the Weibo has potential to deliver a 5 to 10-fold return in the long run. Yes, you're right. 5 to 10-fold return in the long run. And of course, profitability is a key. They have to keep showing the real earnings growth, but based on what I have seen so far, the direction looks promising. If it goes down to a $10 or even lower, I might just add another 2 to 3 to 2.5%. And a long-term target, which I, anticipating will be 18 to $22. Yeah, that's just my personal thought. I think it's gonna go to 18 to $22. If you remember back in the time, I think when it first released, I think the IPO it was $88 per share and now down to close to $10. As I'm filming right now, this is the afternoon time on December 10th. Um, I don't know what the price currently now. Might be closing to $11 per share. I'm not sure. Um, I personally only opened my position not too long ago, and I haven't added too much, yet. Right now, I'm keeping my allocation around 4 to 5% of my total portfolio. If the stock continues to pull back, for example, if it, drops below around $9.50, I might consider adding another, 2.5%. But again, this really depends on the market condition and my personal, you know, um, spare capital. From a long-term perspective, I'm bullish on this stock, and this is a position I plan to hold and leave untouched using only, you know, spare money, no pressure, no emotional trading. I'm simply going to let it grow, and if one day it multiplies, I will look back and be glad I stayed patient. I personally use Weibo, like I said, for quite a bit now, and I generally like the platform, and that is the part of the reason I'm confident in it long-term potential. To me, Weibo is not just a trading app, it's a product that I used, trust, and benefit from it. That gives me additional convinced as a, investor. So let's keep going on to the next page. This is pretty much, what I think about Weibo strength and potential upside. hmm Like I said, I'm gonna be holding on to it and not selling it for at least another year and a half or something like that, because the moment when you start selling the stock, right, you're gonna pay tax, and that is not a small amount of tax you have to pay, depending on which state you stay in the United States of America. All right, so next I want to talk to you guys about UPS. I think back in January 2022, UPS was trading at around $280 per share, if I'm not mistaken. Today has dropped down all the way to about $94.87 last time I checked. And right now, as well as this, video being recorded, I think it might go up just even a little bit more, closing $100 per share. I'm not sure. But here's the thing, if you are an older investor, this could be a stock for you. All right. It is a large, quite a stable company. It's not type of company or stock that suddenly jumps, or crashes 20 or 30% just because of one single news headline. Most people cannot take it. Their hearts just can't take it. But with UPS, if you're holding it long enough, right, what you really care about is the dividend. And right now, UPS offers a really strong dividend, about 6.63%. That's nearly 7%. And if you think about that way, if you're putting a $100 into UPS and you absolutely doing nothing, you are earn $7 a year in dividend. That's a simple math to think. But if you're putting $1 million in it, that's $70,000 a year. Again, doing nothing, just holding the stock. And it is, just an example, but illustrate the power of the dividend investing. Don't be fooled by the irresponsible YouTubers telling you the options that they can make 10 to 20 times, you know, money just overnight. They never show you how much capital they actually put in. $1,000 turned into a $10,000 sounds impressive, but in reality, it is still only a 9% dollars again. The risk is massive. And as a long-term investors, we are not trying to get rich overnight. If you want to do that, I rather suggest you, to be honest, just fly to Las Vegas, and maybe the odds might even be better than you trying to YOLO options. hmm As for me, I can't just, put all my money into only one stock, AI or semiconductor or high tech growth stocks. I want diversification. All right. I want some stability, and because as everyday investors, we still have jobs and we still have responsibility, and we can't afford to watch our portfolio collapse by 40 or 50% overnight, right? And that's why I personally like UPS, and I also hold stocks like Johnson and Johnson, Pfizer, and these are not, glamorous, but they provide stability and steady dividends. So when the tech stocks eventually experience a big correction, and trust me, one day they will. And I still have other sector holding my portfolio together, and they help me get through those tough times. Like I said, dividends are one of the most powerful tools in the long-term investing. It's not just because I read some books and just because I personally experienced it, for the past few years, how much dividend has brought me, besides the stock gains, of course. and they grow quietly, they compound, and over time they can become a major source of financial strength. And like I said, that's just my personal view, but I truly believe in the value of a dividend investing. Personal thought, if you want to build real wealth, you have to take it step by step. There is no shortcut, there is no magical path to, getting rich overnight. Please do not take money you work so hard for and your paycheck, your savings, 401k, throw it into the stock market and with a gambling mindset. All right, let your money grow slowly and responsibly and steadily. hmm And that's the real way to build long-term wealth. These are just my personal suggestion for beginners who are new to investing. I'm not a market, my I'm not a market veteran myself. I have only been investing for under 5 years, but in this time, I've learned, one important things: nobody wins in the first year. I didn't win either. My first year, I lost money too, and that's normal. And that's why I'm telling you, be careful with your hard-earned money. Don't listen to random people online who constantly give, options but never really show you their real account history or real trades. Don't get fooled by those flashy thumbnails and crazy claims. A lot of creators make money from YouTube sponsorship and views, not from investing. Everyone has their own way of making a living, and that's fine, but you need to protect yourself, right? And what I truly don't want is for you to take money you work so hard for and put it all into the market without knowing anything about it and lose everything because someone else, you know, advertisement or propaganda. This is your money, your future, your responsibility. Invest slowly, invest wisely, stay calm and patient, and protect your financial future. All right. And of course, if you're watching this and you're already at, in your 40s, 50s, 60s, the reality is that you can invest the same way the younger people do. You can't just go all in on a small cap stock and hoping that it will take off the next day. Younger investor can afford to take and make mistakes. They have time on their side. You don't. If they blow out the account in one day, they can rebuild and learn and try again because they have time, but you don't. But for us as middle-aged investors, it's just different. One major loss can take years for you to recover. Sometimes it might not even be possible to fully to climb back out from the hole. Because the money we're investing now isn't just extra cash, it's part of our retirement, our future. Losing it would have real consequences, I'm telling you. And yeah, so let's talk about our next stock right here, Nike. Hmm. Right before I think recording this video, Nike was trading like around 64 or $65 a share, and honestly, I think this is a reasonable price to start building, a position in your portfolio. Nike, everybody knows Nike. Nike is a global leader in the sport wear and footwear, right? Seeing a company of this size and brand strength drop this much level doesn't happen often. Okay, in my opinion, hitting $100 again is just a matter of time. And yes, the last few earnings report were not great, but long term, I still have strong confidence in the company. And Nike has been a part of the people's lives for decades. This brand is iconic. And if you follow the news, you will see celebrities, partnerships, marketing campaigns, and collaboration that keep the brand relevant and growing. So for me, my personal, suggestion, or what should I say? My personal thought here, if it stays below $70, I think It's never, too late to add more cash in it, but remember the risk. So my long-term target for this stock will be about 100 $120 per share, and because Nike gives a good dividend, I will keep that for a really long term, not selling, and just not touch it, forget about it, and then yeah, take what I said and think it through and make your own decision. As for me, I remain long-term bullish on Nike. And again, just my personal view, not a financial advice. And please do not put all your money into Nike just because of what I said, okay? Or any single stock. If you stay patient enough, let the time work in your favor, you're more than likely to see a stable and meaningful returns for this stock for Nike. All right. Okay. And next, let's talk about the last stock I want to talk to you guys about is CarMax, a key player in the used car sector. Now, with the possibility of interest rate cut coming up, which I believe the rate has already been cut as you're watching this video right now, current time, I strongly believe the rate cuts will benefit the used car market. Lower financing costs almost always help this sector. Right now, CarMax is still heavily influenced by the large institutional investors. When institutions want to push the price up, it goes up. When they want to dump it, it drops dramatically. And so don't be surprised by the market. That's normal for a stock controlled by the big, money out there. Personally, I bought my shares at around 45 or $47 a share. So if you're entering now, your cost, will actually be a lot lower than mine. And yes, I'm still in unrealized lost, territory, and that's fine. I'm not worried about it. You know why? Because I believe institutions will eventually start buying back into CarMax after upcoming earning reports, which I believe in about 10 days from now. I'm not sure. I need to go back and look at it again. But not all at once, but slowly, gradually, over time, which is typically how institutional accumulation works. My plan is really simple. I'm holding the stock for at least 1 to 2 years. I'm not selling anytime soon, okay? Because the moment you sell, you trigger taxes. But if you hold it for over a year, your long-term capital gains tax is lower. And once the CarMax eventually recovers, which I personally believe it will, the net profit after tax is still very meaningful. All right. So if you haven't opened a position yet in your portfolio, take a look at this stock, okay? In my personal opinion, CarMax is a solid long-term play, and I will hold it for a year long, like I said, and you are more than likely to come out with some profit. The only downside which I don't like about this stock is that the CarMax doesn't pay dividends, and that is one thing I don't like. But aside from that, I think it just, you know, a strong long-term investment in a long sorry a strong long-term investment opportunity for me. Again, this is just my personal view and not a financial advice. Hmm. For a long-term perspective, I personally believe CarMax has potential to return to $80 or more in the future. Now, I can't tell you exactly when it will reach that level again because this stock is largely controlled by institutions. When big players, big money want to move the price, they move, really, they move it real quick. Could it take less than a year? Maybe it's definitely possible, but the timeline will depending on the market conditions as well, the interest rate trends, earning performance, and institutional behavior. What matters more is whether you have the spare capital or money to invest and whether you are able to hold the stock long enough for it to recover. In my personal opinion, anything under $40 currently now is a pretty attractive entry point for CarMax. this is just how I see it. You don't have to do what I said, but it's truly up to you. Um, it's everything I wanted to share today. Again, everything on this channel is just personal interest and my personal opinion, not financial advice. And all the analysis I talk about today reflected only how I see the market. All right, guys. And so, um, and yes, I still personally buy into the stocks I believe in. I truly think there are many opportunities ahead, and the chances of seeing some of these stocks double in the long term are very real. Remember, if you invest, 10 different companies and you don't need all 10 to win, if 3 or 4 of them double, your overall portfolio can still end up very profitable. But you must manage your cash, okay, wisely. Control the size of your every position. Your portfolio allocate, responsibly across different sectors, not just all in one AI sector or semiconductor sectors or anything like that. Do not invest. Do not let your investing take over your entire life. Okay, it's not the most important thing. I'm pretty sure you got other things that more important to you in your life other than trading. We have responsibility. We all have families out there. We have jobs. We're not at the stage of being extremely wealthy yet, and so it's better to stay conservative and stay disciplined and stay patient. And as 2026 approaches, I want to wish all of you a wonderful holiday season. Use some of your investment profit to treat yourself and your family, go on a trip, enjoy a nice dinner, or buy something meaningful. A whole year has passed and you deserve it, okay? Let's try to make the most out of the last few weeks, of the year and earn some extra cash and prepare ourselves for a strong start next year. If you have any questions or thoughts, leave them in the comment section and I would love to hear your opinions and continue to discuss more stocks out there in the market. Don't forget to like the video and subscribe to the channel and share with your friends and family. Thanks for watching and I will see you in the next one.